Welcome to this week's question and answer video series brought to you by the Weekly Advertiser and Meriton Financial Groups, where you have the opportunity to have your financial related questions answered. My name is Ashley Rowan and I'm a financial advisor with Meriton Financial Group. Today's question looks at aged care considerations for farmers. So here's the question. My elderly parents have a farming business, however they are currently considering their aged care options due to health reasons. They are concerned about the assessment of their assets and how that will impact the cost of care. Can you explain this further? Thanks very much for the question. It's an excellent question. Arranging aged care can be stressful, but when it involves someone who is a farmer, unique circumstances do apply. Farmers, often a husband and wife team, may continue working well past retirement age because farming isn't just a business, it's a lifestyle. As a family business, the farm might be passed down to the next generation. So when considering aged care, questions over whether to retain the assets or to sell them can be quite daunting and emotional. It's possible that the options available will be limited by the cost and level of care required. Looking at aged care in general, costs vary considerably, and residents may be asked to pay a range of fees. The daily care fee is regulated by the government and cover expenses such as meals, laundry and cleaning. A person not receiving the age pension or recipients of a part pension may be income tested as well and charged an additional fee. An accommodation charge is applied to residents with sufficient assets and who require a high level of care. The accommodation bond is subject to the resident's assets and is usually for those requiring low care or who choose an extra service facility. It can be pricey but usually refundable, less a monthly deduction. According to the Australian Government, assets are defined as most of the things you own. Given this, if the farm, the land, buildings, equipment, fencing, livestock are considered assets, assessment may deem the farmer wealthy, which may increase the cost of care. The question of income and assets may be further complicated if, for example, the wife enters care but the husband continues running the farm, because capital to pay for her care may be difficult to raise while the business remains in operation. One of the most pressing issues farmers face when considering aged care is what to do with the business itself. If the decision is made to dispose of the assets by selling or gifting, alternative problems may arise. A financial planner can help determine the most appropriate course of action while considering the family's plans for the future of the farm and its assets. When making arrangements on behalf of an older relative, you must ensure that the appropriate powers of attorney are in place. Speak to your solicitor or ask your financial planner for a referral. This is an emotional decision for anyone, but when your home is your work and you've worked hard to keep it over generations, deciding what to do next is just a little bit harder. Please remember that this is general information only, and if you need personal advice, please speak with a suitably qualified financial advisor. That takes into account your specific details for giving advice. Thank you for sending in the question and thank you for taking the time to listen. If you have your own question that you would like answered, please go to our website and submit your questions there. We don't use any names when answering questions to protect your privacy. Thanks again for watching the video and we'll see you next week.